My guest today is Ming Wu. Ming is the founder of RabbitX. RabbitX, yes, a global permissionless perpetual futures exchange. Welcome to the show, Ming.
Thanks for having me. It's great to be here.
Great to have you here, Ming. Let's do what we do at the beginning of the show. It would be cool if you could please introduce yourself. Would love to hear just a little bit about your background. What have you been doing in the lead up to founding RabbitX?
Sure. So a bit about myself. By the way, thanks for having me. I started my career in trading at Goldman Sachs. I was a trader on their trading desk in Australia, Sydney, and I was trading equities and equity futures. I discovered crypto and Bitcoin in early 2017, and I had bought my first Bitcoin, around January of 2017 and discovered the white paper and was just fascinated by it. And it was around, I think, that cycle that I discovered BitMEX, which is the first perpetual futures exchange that existed in crypto, and there was a lot of arbitrage opportunities there, and that's when I went fully into the crypto industry and was running a market making desk for crypto futures on BitMEX, and subsequently I joined Paxos as their head of Asia in charge of OTC trading, and I also had experience with market making on the futures side across different centralized exchanges such as Binance, FTX, Bybit. I discovered DeFi around 2019, and it was very interesting time because back then everything was very new and you had a lot of possibilities, and there was this idea that finance could be open and global, permissionless, right? And that was when I was really captured by the potential of building something that could accelerate the adoption of DeFi. And so in 2021, I raised some funds to start building RabbitX, and that's where we are today after building for 2 years, and launching RabbitX. We are now the world's first permissionless perpetuals exchange with zero fees. And our goal is to build perpetual futures on not just crypto, but also stocks, equities, markets, gold, and RWAs. And our vision is to bring the global markets to traders and to investors and make that as permissionless as possible and as accessible as possible to the global markets.
Yeah. Got it. Thank you, Ming. And I suppose it would be useful, you don't need to go too technical, but just for the listeners who aren't aware, just briefly explain, what exactly are perpetual futures when we talk about perpetual futures? What's the difference from traditional futures contracts, essentially?
Sure. So people might be familiar with futures contracts traded on CME, or it might be traded in the ASX. Typically, futures contracts, they have an expiry date. And when the futures contract reaches that expiry date, it ceases to exist and your position is closed, automatically closed by the exchange. With a perpetual futures, that contract never closes, that contract never expires. Hence the term perpetual futures. So that's the, I guess, technical financial definition of what perpetual futures are. The benefit of perpetual futures is that it allows traders to participate and to trade an underlying with high leverage, and also without worrying about the need to continuously roll over your futures contract. Meaning that if you had a traditional futures contract, let's say you buy an S&P futures, you would have to reopen that contract every month or every quarter. Whereas with a perpetual futures, you don't have to do that. You don't have to worry about that. All of that is abstracted away. And so it creates a very elegant instrument to trade. And we believe that perpetual futures are going to be the future of trading because it is just a much better form factor for trading. It is a much more easy to use and accessible product. And it's a lot easier for people to understand. All you need to do is just fund your account and you can start trading without worrying about having to roll over futures. And, a lot of these complexities that are associated with financial futures is simplified down.
Yeah, and you mentioned it was BitMEX that changed the game really when BitMEX introduced perps back in 2016 or something like that, wasn't it? And I think you yourself said, yeah, you discovered crypto and discovered BitMEX, and so maybe just give us an idea of how perps became so popular through BitMEX and why it was so attractive to traders, and I guess link it to what you're trying to do now, Ming.
Yeah, so BitMEX was really the pioneer of perpetual futures, and they created the first iteration of perpetual futures, which has changed over time and iterated over time with different features and different, I guess, changes and nuances. So I think for RabbitX, perpetual futures is the main product, right? And the biggest difference, I guess the biggest benefit of perpetual futures is that it allows people to be able to trade with deep liquidity, with very low fees and very low spreads, and also allows people to trade with very little capital. So, there are people that might feel that a large investment of $1,000, $5,000, $10,000 into crypto is very risky and very scary. Well, with perpetual futures, you can have the same size of investment with just $100 or $200, right? So you're only risking $100 or $200, and you can get the upside of investing in Bitcoin. And just even with $100, $200, you can buy one whole ETH, which is at the current market price. I think it's 1,800, or maybe by the time this podcast comes out, it's $2,000.
Yeah.
But with $100 or $200, you'll be able to buy one whole ETH without putting in 1,800 or $2,000. So I think that's the biggest benefit to a lot of users and a lot of traders. And we think this invention and this product is too good to be just hidden in crypto. I think it has to go out to more than crypto assets, out to gold futures, equity market futures, commodity futures, and RWA. So one of our goals is to bring RWA perpetual futures to RabbitX. And for example, you could even have treasury yields. You could have treasury yield futures. You can have FX futures, et cetera, et cetera. So really, the market is a blue ocean.
Yeah. Okay. Well, we'll talk about that because I know you are doing. Yeah, you're doing the gold thing. RWAs, absolutely. It sounds amazing. One, as you've identified, Ming. Yeah, one of the advantages is you can essentially place. You don't need a huge amount of capital, right? But the reason for that, of course, is you can use quite a lot of leverage, and I guess that kind of the flip side of that is one of the rules of trading, if you're not really a very good trader, is you shouldn't touch leverage. I'm sure, but the flip side of that, of course, is leverage. If you're right, you can win big with small positions. So I guess all I'm saying is, how do you think about this in terms of some critics would say leverage is gambling. It's a kind of it's a dangerous game. Whereas the flip side of that is what you will outline now, I'm sure, Ming. But yeah, just love to hear your thoughts on how you think about this.
Yeah, so there is one key difference in leverage when you're trading perpetual futures compared to leverage in traditional finance, or leverage when you borrow to buy a house. When you buy a house, you borrow money from a bank. That's leverage, right? And in fact, you're leveraging hundreds of thousands of dollars when you borrow from a bank. In perpetual futures, one key difference is that when you lose or when your position goes against you, and you lose money on the platform, you can only lose what you put in. Whereas with a bank or with your broker, you might be trading on ASX, you might be trading on NYSE, wherever you are. If you lose money on your equity portfolio and you're using leverage, or if you lose money on your house portfolio, you can go bankrupt and you can owe the bank money, right? And the bank can come after your other assets if you owe the bank money. Whereas with a perpetual futures and with RabbitX, you can only lose what you put in. Meaning if you put in $100, that's the maximum you can lose, right? So you can control your risk very, very well, and you won't ever owe anyone money, because if you get liquidated on your position, if your position is closed because the position moved against you and you lost money on the position, but you won't ever go into debt, right? Whereas
Yeah.
with a in traditional markets with leverage, it's very dangerous, because if you go into debt, you could owe that debt to the bank for the rest of your life. You have to pay that off, right?
Yeah.
So I would say that is a very key difference that people often overlook.
Yeah, and look, that is extremely well articulated. Thank you, Ming. You talked about, like perpetual futures for gold, for real world assets, RWA. Speaking of gold, because you've already partnered with Paxos, right? Which I think, you
Yeah.
said you were working with them previously, and that's, I think you call it Pax Gold Perpetual Futures. So that is that live now? How just
Yes.
explain that?
Yeah, so we partner with Paxos to launch the first decentralized Pax Gold perpetual futures. Pax Gold is a gold-backed token, meaning that each token represents a real piece of gold stored in a vault. And
Right.
so we created a futures on top of this token that represents a real physical gold stored in a vault, right? And Paxos is a New York trust company. They have a very well well thought out and very high security vault that stores all of this gold. And so, we believe that, they are the best partner to partner with to launch this gold backed future.
Yeah, and so I'm sure that'll be very popular. Gold, huge market, obviously.
Yeah.
What's next in the what other assets are you looking at in terms of RWAs?
Yeah. We're very excited about trying to get equity futures launched, and we're also very excited to get FX futures launched, because we think they are huge markets that haven't been disrupted for half a century. The first, I think the first equity futures on the CME launched half a century ago. And so
Yeah,
there hasn't been any disruption there. And we believe that the market is ripe for disruption, because we are now in the internet age and everything has changed except for finance. And the internet and the digital era has impacted every single industry in the world except for finance. And it's time to bring finance into the 21st century. It's time to bring finance on chain. And we believe that this is going to be a killer product. It has already been a killer product in crypto. It's going to be a killer product in FX, in equities, in commodities.
yeah, no doubt. Thank you, Ming. We should also say, because one of the features of RabbitX is what you call the zero fee. I guess it's like, it's really trading with zero fees or zero fee
That's
revenue
right.
model. So just talk us through exactly what that means and how that works, because someone pays the fees, right? But not necessarily individual traders. Talk us through it, Ming.
Exactly, exactly. So we have changed the game. We have changed the game with our business model, and we don't charge any fees, any trading fees to individual traders. How we make money is we charge a higher fee to traders that are using our APIs, meaning institutional traders, high
Yeah,
frequency traders, those traders that are connecting to our exchange using our API infrastructure. API is a way to programmatically trade, right? And so all of these programs and algorithms and bots that are trading on an exchange, we charge them the fees. So we are trying to do, well, what Robinhood initially set out to do, which is taking from the rich and giving to the poor, right? We're taking fees from the institutions, from the algorithms, from the bots, and we're subsidizing the trading fees of retail traders, individual traders like you and I. And we don't sell the order flow of our retail traders or individual traders. We don't sell the order flow. Everything is transparently on the order book. Everything is transparently on chain. And so we are doing, what Robinhood initially set out to do, which is taking from the rich and giving to the poor.
Yeah, and that went somewhat controversially for Robinhood, didn't it, for a while? But and just to be clear, then there's no latency advantage or anything like that for the institutions using the API. There's no advantage to them.
Not at all. Not at all.
Yeah, interesting. Okay. Yeah. What else should we cover? I guess you've also got like there's quite a good APY on some of the stable coins through the RabbitX vault, right?
Yeah, that's right. So because of our expertise in trading, we decided to open source that expertise and build a market making vault that delivers anywhere between 30 to 60% APY on stablecoins deposited into the vault. And the way that it's able to earn that APY, such a high APY, is it combines our high frequency trading experience and technology infrastructure. And we've open sourced it to the public so that anyone can become a professional market maker and participate in the vault and market make on RabbitX and essentially earn the same returns as a market maker would. Now, right now, for the vault, we are not charging any performance fees. In the future, as we scale and as we generate more revenue from the vault, and as the TVL grows and as we become more and more successful, we may charge a performance fee because of the infrastructure costs that we have to pay in order to continuously run this market making software and algorithm on the exchange. The software development itself costs hundreds of thousands of dollars, upwards of millions of dollars just for the development, and then the continuous improvement and continuous infrastructure costs is also a very expensive business to run. In fact, if you look at high frequency trading firms like Jump, Flow Traders, Tower, they spend hundreds of millions of dollars a year just on infrastructure costs. And so right now we are paying all of that cost ourselves, and we're passing we're allowing anyone to become a professional market maker on RabbitX by open sourcing this to the public, right? And open sourcing the vault and strategy to the public. And for now, we are not charging any performance fees. In the future, we may add a marginal performance fee to the vault performance just to help us cover our costs.
Yeah, makes sense. You've got local payment support in, I think, India, Europe, and Asia. So is that just speak to that, Ming? Or loves to understand where your client list, your target audience. I'm sure it's like global, but is it particularly concentrated in particular areas? How do you think about that?
We haven't seen any, high concentration in any one particular country or region. We do see a very distributed global user base, which makes our job easier and also more difficult because we have created a global permissionless exchange, so anyone can trade, but it also means that we have to, for example, be aware of the different language barriers that different cultures might have, and also be able to cover the customer support 24/7, right? And so it's both a really exciting thing and also a challenge. We've partnered up with a lot of really great OTC partners and fiat on-ramp partners to be able to offer a global first local fiat support for various regions such as Asia, India, we have UPI payments. In Europe, we have SEPA payments. Um, and, we are able to offer these fiat on-ramps through the fiat on-ramp service providers that we've partnered with and also OTC partners that we've partnered with.
Yeah, makes sense. Maybe just be good to just talk some more just quickly on a leverage, Ming, because obviously you're a leverage guy, and I can in my notes I have it says ask Ming why 50x leverage with risk controls can potentially give a user or a trader smarter exposure. So just explain what you mean by that.
Sure. So I think when we are growing up, we often associate leverage you know, with something bad. Like, we have a negative connotation to leverage. But if you look at the most successful people in the world, they got there by using leverage.
Yes.
If we look at the most successful investor in the world, Warren Buffett, he is able to generate those returns because he has leverage, because he has Geico, because he is able to borrow from banks and be able to use those borrowings to invest in businesses. It's the same thing here. When you buy a house, you're using leverage from the bank, and that's why Australia has such a big property boom, and so many people have benefited from that. And so leverage is not necessarily a bad thing, but you have to be careful. It is a double-edged sword, right? So you have to be careful and you have to be aware of the risks. I'm not saying that leverage is risk-free. It is a double-edged sword, but it is a boost to your investing powers. Now, where it can be used as as a very smart tool in your investing arsenal is when you find asymmetric opportunities where you believe that there could be a very big upside and very low downside on an investment. Let's take Bitcoin when it was, when we had a bearish cycle and Bitcoin was trading around $18,000 before this run up to, 60,000 and then subsequently 100,000. When Bitcoin was sitting at around $18,000, if you believe that Bitcoin is going to become a global macro asset, then 18,000 is very cheap. It's a very good price to buy. If you use your cash to buy Bitcoin, maybe let's say you had, $500 at the time, and you use $500 to buy Bitcoin, well, you would only be able to buy 0.00, 2 of a Bitcoin, right? But because you're able to use leverage on RabbitX, with that $500, you'll be able to buy one whole Bitcoin, right? And you'll be able to participate and boost your returns because you now have one whole Bitcoin. As Bitcoin goes up from 18,000 to 20,000 to 60,000 to 100,000, now you're not just making, three, four, $500. Now you're making 20, 30, $40,000 on your $500 investment. Now, what's the downside? Well, the downside is if Bitcoin doesn't go to 60,000, $100,000, but instead goes from 18,000 to 16,000, well, you might lose your initial capital, invested capital into that trade, but you've capped your loss at $500, right? You haven't lost any more than that. You've capped your loss at $500. So that's what I would call a smart way to use leverage.
Very well articulated. Thank you, Ming. And I think as we start to finish off this part of the podcast, it would make sense, I think, I'd love to get your thoughts on, you're a trader. You've been a trader at many trading shops, Goldman Sachs. You've traded crypto, equities, forex, whatever. How do you think about the kind of the markets at the moment? You can tackle this any way you want, but just be interested in what you think is happening with, I guess, global markets, crypto, whatever you want. Short and medium term. What's going on from your perspective, Ming?
I think you really have to watch the 10-year and 30-year yields on the US Treasuries because at the end of the day, the US market is the only market that matters because it is where the capital flow is. It is where investors reference as a leading indicator of the global economy. And Bitcoin as an asset it has now become a global asset class, right? It's a global macro asset class. It is no longer just some cyberpunk niche category. It is now a widely recognized global macro asset class. Now, the jury is still out as to whether Bitcoin should be correlated with the stock market, with the US stock market and risk assets, or it should be correlated with assets such as gold, such as commodities, right? Because what has been interesting that I've noticed over the past couple of months is that Bitcoin has, at moments of macro tension, meaning trade tariffs and big macro news, when Trump announced the big tariff bazooka, Bitcoin has traded like a risk asset in the short term. Why do I say in the short term? Because after that initial drop in Bitcoin down to, I believe it was $75,000, up from $107,000 down to $75,000. That's a pretty big pullback. That's a 25%, 30% pullback. After that initial pullback, Bitcoin then traded up very strongly, and it continued to trade strongly even as the equity markets continued to drop. Which, if you look at that decoupling between the U.S. equity markets and Bitcoin price, in the past, Bitcoin price has roughly followed the U.S. equity markets because it's always been considered as a risk-on asset. But that decoupling made it clear, crystal clear, that Bitcoin is now going on its own trajectory, and it is no longer considered as a risk asset. It's now in a class of its own, right? And so we need to go back to first principles, which is in a global economy where you have two massive superpowers, one that is ascending, China, and one that is trying to keep its throne in the world as the largest power reserve currency of the world. These two are inevitably going to clash head to head. And a trade war, as the name suggests, is still a war. It's still a type of war, right? And we, touch wood, we don't want to see a physical war pan out. But I think Trump has set the frame and set the stage that he now views the U.S. superpower at risk because of China's ascendance. And so now in a war, as investors, you have to assess the U.S. market might no longer be a risk-free safe haven market, right? So if the U.S. is not a safe haven risk-free market, China is obviously also not a risk-free safe haven market. Where else can you invest? Because as investors, we're always looking for the best returns for a given risk profile, right? And so what's your opportunity cost, right? So if US is not the safe haven as we thought it was, China is not a safe haven, right? There's nowhere that is a safe haven to invest anymore. Then what's your alternative? What are your options? Your only options are physical gold stored in a vault somewhere or under your bed, or in a global decentralized apolitical asset class that is not controlled by a single government, that no government has any power to force you to give up your assets, right? So Bitcoin is an asset that no government has authority over. In the past, we have seen during war times that this happened with the Deutschmark, this happened with the sterling, the pound, and the Japanese yen. During war times, countries will massively devalue their currencies, right? But Bitcoin is not controlled by the government. No one can devalue Bitcoin. right? And so the only safe haven you can have is gold, physical gold, or Bitcoin. And so I
Yes.
think investors are now starting to realize that, okay, if I only have these two potential asset classes that is outside of the reach of governments, then I need to allocate accordingly. I know that's a very long-winded explanation, but the short summary is you only have two asset classes that is out of reach of governments in a global trade war, in a potential hot war between two massive superpowers, and that's gold and Bitcoin. And so you need to allocate accordingly.
Yes, indeed. I hate to say well articulated again, Ming, but that was well articulated again. Thank you. Let's finish up this part of the podcast, and I'd like you to do that, Ming, just by telling people who do, if they're not already familiar with RabbitX, and maybe they've got that $500 and they want to buy a whole Bitcoin with it and have a little, get some trading going, set up some positions. What is the best way for people to do that? What should they do? Where should they go?
Sure. So you can go to our website, rabbitx.com. That's rabbitx.com. And you can connect with either your email or your phone number. It's a very easy, painless sign up process. It literally takes 15 seconds and you'll be able to deposit with either crypto or you can deposit with one of our fiat options with our fiat on-ramp partners. So we support UPI in India, we support FPS in Hong Kong, SEPA in Europe, Visa, MasterCard. There are over 50 different options to choose from. And then you'll be able to immediately start trading. So you'll be able to open an account and start trading in less than 5 minutes.
Awesome. And that link is in the show notes, folks. But rabbitx.com. All right, time to finish off the show, Ming. And we do that, of course, by running you through the very famous crypto conversation hot take round. Are you up for it?
Yeah, let's do it.
All right, I'm just going to run some questions at you, Ming. Just want you to give me your honest answers, I guess like kind of hot take style, if you like. Question one for you is, where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I would say that multi-chain is not opportunistic. It is, different chains have different uses. Bitcoin is a asset class, but it is not good for payments.
Yeah, no, that's quite right. All right, what would you say, Ming, is your firmest conviction crypto opinion?
I think DeFi is going to eat finance, and I've believed that since the beginning of DeFi, and I still continue to believe that.
I like it. Bill Gates famously said, Ming, that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So look, anything you like here, but I guess, DeFi, RabbitX, what does it look like in 10 years' time?
Our goal is, and our vision is to become the most liquid and most accessible futures trading platform and to be able to open up financial access to global citizens, to every trader across the globe, and have limitless investment opportunities for investors.
Very good. All right. William Gibson famously said, Ming, that the future is already here. It's just not evenly distributed. With that in mind, can you think of an example of the future being here right now, but most people aren't aware of it?
Yeah, I think crypto is a really great example of that because it is already here. It is already being used by, there are billions of dollars in payments and assets in crypto and in DeFi. And it is not in the mainstream use and mainstream consciousness. DeFi is not being used every day by everyday people. And we want to change that.
Yeah, very nicely said. Final question for you, Ming, is what is your favorite science fiction book, film, or TV show?
That's a great question. Um, I really like Asimov's Foundation series,
Yes.
and for my favorite science fiction TV show, it's got to be The Expanse.
Yes, very great. Two great selections there. Yeah, some lovely literature, and with the Foundation series, and of course, yeah, The Expanse on Netflix. Fantastic, Ming. This was a lot of fun. Thank you so much for spending some time with us today. Again, just close it out by once again telling people where they can go to get started trading on RabbitX, and yeah, shout out your socials, business and personal, etc. Go for gold.
Sure. So you can check out our website, rabbitx.com. Sign up, get started in less than 5 minutes. And we can check out our Twitter, which is rabbitx_IO. And yeah, so I think it's going to be a very exciting future. And thank you so much for having me.
Awesome. All the best, Ming, and bye for now.
Thank you.